happening on the CPSE and the PSU space, because that's the space which saw the maximum pain. The first rates are up on your screen. We've got the Nifty opening at about 21,650, the Sensex opening at about 71,250, which is 180 points higher on the Sensex coming through right now. And the Nifty Bank is coming up with about a 70-point higher start. So these are tentative first rates coming through this morning. Maybe we could just look at this PSU index, the CPSE index, and that'll give you an overall picture of what the rates are looking like. There you go. It's starting 10 points higher, neither here nor there. 0.25% now, 54.65. Sonia is crossing the big wall with more rates. Sonia.
All right, thanks a lot for that. So let me just begin first with the stocks that are reacting to their numbers, right? You have Coal India, which is top of mind. Strong earnings. It was a top line beat, and the market likes that, up almost about 2%. The volumes are also picking up on Coal India. Novelis had good numbers, so let's just pull up Hindalco. But the problem, as Nigel was also telling us, is that debt has moved up quite a bit, and that's something that the street definitely doesn't like. So look at that, Hindalco down almost about 10% as we speak, the biggest loser at this point in time. Talking about big losers, that big downgrade that has come in from Macquarie on Paytm, the street is not like that. 7.5% lower on Paytm this morning. A lot of PSUs are in focus. NHPC, SAIL, etc. saw large delivery selling yesterday. There is some follow-on selling this morning as well. SAIL is down about 4.5%, even on the back of its earnings, so keep an eye out on that. Bharat Forge, after the 14% knockdown yesterday, Bharat Forge is seeing an additional 2.5% lower this morning. That's also because of the weak commentary from the management, and a lot of brokerages are negative on Bharat Forge. As we mentioned a while back, most brokerages have their target prices below the 1,000 rupee mark. Apart from that, we also spoke about SAIL, right, and the selling pressure over there. Let's move on to some numbers in the broader markets. Time Technoplast had a good set of numbers. The earnings were strong. The profits were up 50%. On the weaker side, you had All Cargo Logistics, where the numbers have been weak. GSK Pharma, the numbers have been weak. Galaxy Surfactants as well. The EBITDA is down about 27%. So these are a couple of spaces that are not looking good. All Cargo Logistics now down almost about 5%. And in a bit, we'll get GSK Pharma. Look at the damage there. Almost 8% gone on GSK Pharma as we speak. And so, the market is definitely in a mood to punish any hint of bad news, whether it's weak earnings or it's downgrades that are coming in from brokerages. Paytm now down almost about 6%. Otherwise, it's a very, very flat opening. You can't really say that it's good or bad, just waiting for the market to settle, but plenty of stocks in focus. Nigel, back to you.
Well, I'm looking forward to my chat with the Hindalco management in the next few hours or so, because the stock is down. We'll require clarification of why such a big uptick in terms of capex. And the street doesn't spare it at all. It's down close to around 10% as we speak. Big selling out there. IRB Infra is another stock that's down close to around 4%. So some money being taken off the table on some of these stocks that went up one way. SAIL, I told you all earlier today, the adjusted numbers looked quite weak. They're sitting on inventory, and the debt number goes up as well. In the past 10 years or so that I'm tracking the company, every time it goes to 150, you're hoping that now this is its time. Apna time aaya. It's always something or the other comes about. And the stock, yet again, went to 150 rupees. It's back down at around 3.5% lower in today's trading session. But I'll wait for some more clarity, with regard to that real price revision that they're talking about, inventory in the books, and has debt peaked out. For the time being, the stock is reeling under pressure as we speak. Hindalco down 2.5%. Nalco, ahead of its numbers, is down close to around 2%. On the flip side, there are a few stocks that are doing well. Gujarat Pipavav, I think they came out with a set of numbers which looked pretty okay. The stock is up close to 5.5%. JM Financial is up close to around 5%. And IRFC as well. Some of these railway themes are coming back. RVNL as well is up close to around 3% or thereabouts. And as we did that market check, the markets that were up, the Nifty that was up 50 points, has come down to around 5 points.
Nigel, Paytm has recovered about 4% from the day's low. So the low was about 386, and it's come up to about 400 plus now. 407 is where we are. So there is a lower levels buying which is emerging, most definitely. And I think that's interesting to see. So 2 million plus shares on Paytm already coming through. But, this is the first 2 or 3 minutes of trade that we're looking at. Just a few more names before we go any further. Market breadth is negative, but, it's vastly different than yesterday. Yesterday was just completely one-sided. Today it's not. So Hindalco, I think, as you mentioned, 10% lower. It's the number one volume traded loser right now. SAIL is at number 2 with a 5% cut. JSL, Jindal Stainless, I think, is down 9%, 536 there. Parag Milk, which had a very sharp move, is at number 4 with largest volume-led loss, 5%, 4.5, 4.75 lower. There is Sterling Wilson, which is down 5%, 555. We mentioned Glaxo, Sonia mentioned Glaxo, 6.5 lower. HEG, Nigel was talking about that, the numbers, etc., 4% lower. There is IRDA, which is down 5%. EMS Limited is down about 5%. Stocks at about 527. All Cargo is down 5%. Again, we highlighted the numbers earlier with Upasana. LG Equipment is down 6%. There is Jyoti CNC, which is down 5%. And then volumes kind of thin out. I think market breadth now almost evened out 1:1 in the broader market, and that's the number to kind of watch out as well. Some of the top gainers, some of the top volume-led gainers are PSUs. NHPC is back up 5%. It'll come up. IRFC is down 7.5% at 152. RVNL is up 5.5%. IRCON is up 6%. So this is, Central Bank is up 3%. Cochin Shipyard is up 3.75%, all with large volumes. Bank of India is up about 3%. GMDC is up 5%. NLC India is up 6%. So the Shipping Corporation is up about 2.6%. So the PSUs, which saw a violent shake-off, there is no real big follow-through. At least that's the first couple of minutes of what we are seeing in terms of price action. Many are up, some are down, but that's largely on the back of some specific earnings disappointments, etc., which we will get to in more detail as we go along. The Nifty is up about 20 points or so. It's it's not a dramatic open. It's like any other decent start that we have. Manish Gunwani is with us. He's head of equities at Bandhan AMC. Manish, great to have you with us here. Thank you very much for your time. Just a quick word on what we saw yesterday with the sharp sell-off across PSUs. It's kind of interesting because this sharp up move has happened at a time when big sectors like banking and some of the largest stocks within the banking space, which were considered high quality and still is considered high quality, HDFC Bank, they've been languishing. So there's been such a sharp divergence, and I think that's prompted many to say that now is the time to actually focus in a big way on large caps and reduce exposures across mid and small caps. Just wanted your thoughts there, Manish, to begin with.
Actually, I'm not very focused on large versus mid. I think in a world where globally, I think growth will be soft and where liquidity will be easy, I think we should not cut the market on the dimension of market cap. I think you have to do bottom-up work. It's a very self-help market to my mind, because what will happen is when both global growth and India growth is also range-bound, like we are seeing with metals or IT services or with banking, there is no industry acceleration that I think you can expect. So, for example, do we expect bank credit growth to go from 15% to 20%? Do we expect global IT services growth to accelerate? I don't think we should. I don't think we can forecast that acceleration. In which case, it's all about, trying to get a stock at a good risk reward, and I think medium-term liquidity will be fine. So I'm not so fixated on. Of course, we will see these tactical corrections if the small cap index has been up 50%. You should expect at some point these tactical corrections to happen.
Thank you so much.
But I think the money will be made by having a 2, 3, 5-year view and just focusing bottom up on themes or stocks which can deliver earning surprises.
That's an interesting way to look at it. I guess that's the best way to look at it, right? Just pick your stocks, pick your sectors. It's always great to see you, on the show, Manish. I wanted to start by asking you about what sectors you can buy for the very longer term, right? Where do you see both value as well as growth potential now?
Yeah, Sonia, actually, I don't think buy and hold investing works anymore. And so I'll not go into the long-term aspect. But yeah, there are, I think, good multi-year cycles that are playing out. I think we've talked about the energy transition and power capex. I think that looks like a good 4-5-year theme. I think there is a risk reward in betting that at some point rural or mass consumption may come back. I think US pharma, generic pharma looks interesting. Real estate, I think, is a sector where we are seeing not only good demand, but supply side consolidation as well. So I think these are some of the themes worth looking at. Now, within that also, obviously, there are stocks you may like, you may not like. But yeah, I think these themes to us look quite interesting.
That's an interesting thing that you said. Buy and hold doesn't work anymore, Manish. So let me pick on that a little bit. Just
No, I
explain
think-
that. Yeah. Are you saying
Yes,
that business
so-
cycles have become much shorter? Something
Yeah.
else has changed? Yeah.
So, 3 points. One is that business cycles are shorter. Two is the price discovery of that cycle is faster, right? So, what I'm trying to say is that if you find a stock which can compound earnings over next 10 years, let's say, maybe 15 years back, every year you would have got 20-25% kind of return. But the price discovery is so efficient today that in the first 2 years you'll make all the money, and then you have to go and find another stock which is like that and which is undervalued, right? And the third point is that the overall global growth, given the demographics and debt, is such that I don't think there is very high macro growth you can expect anywhere in the world, actually. So the landscape for, let's say you assume that if banking credit can grow at 15-20% for next 5 years in India, then you can bet on a small bank becoming big. The thing is, no one has visibility on that 5-10 year basis anymore. So because of these reasons, I think you have to be very nimble. The amount of institutional money is going up, which means that, as I said, not only are business cycles shorter, but the price discovery of that cycle is also faster. So I think you need to be a bit more nimble than you were 10-15 years back.
Okay. I wanted your thoughts also on spaces like autos, for example, right? They've come back in a big way. This whole electrification theme is playing out. Tata Motors, for example, has doubled in the last 1 year. Do you see this as a structural growth story, or do you think we've reached a mature phase of the upcycle?
So in general, we like autos as a house. We're broadly overweight, more on the passenger and the two-wheeler side, not so much on the CV side. But yes, I think global auto also, last 3-4 years post-pandemic, the recoveries in Europe, China, etc., have been weak. So you can expect that at least we're not buying something at top of the cycle. So yeah, I think autos in general is an interesting space at this point of time.
IT. So just to, it's not large cap versus mid caps. It's not buy and hold. But what about global versus domestic? Because domestic oriented sectors have done extremely well. Manufacturing, industrials, capital goods, right? Maybe banking, not so much recently. Private banks, that is. But what about export sectors? I mean, do you see opportunities there? Tactically or maybe slightly longer term?
In general, I'd be more bullish in the domestic sector still, although the valuations have gone up. There might be some tactical opportunities in sectors like IT and metals. But really, when Europe, Japan, China seem structurally weak, US also entering a cyclical slowdown, that's the broad consensus, although it's not happening. I don't think you can be very bullish on large exporters because, again, the large exporters are typically mature in terms of market share. So it's not an emerging theme in one sense, right? There are obviously emerging export stories in capital goods, pharma, etc., which seem more interesting than the very large sectors. And I think the medium-term challenge for exporters could be, and we need to see how it plays, but I think that can very well happen, is that the rupee can stay flat for probably the longest period of time we've seen. And then the margins of exporters are obviously can come under a lot of pressure, because I don't think we've seen rupee being flat for 3-4 years. It's already 1.5 years, and the way the macro is shaping up, we may have, unless something unknown happens, given that our current account seems very, very solid. The dollar has done well for last 10 years. not likely to appreciate at a global level. In which case, let's say in 2-3 years, rupees 83, a lot of the exporters are, their business model is predicated on consistent rupee depreciation. So I think that can be a challenge. We need to see that part how it plays.
Okay, all right. Well, just, wanted to mention one thing on the markets. It's flat now for the headline index, but there is a steep sell-off that we're seeing in the mid-caps. Just look at that. 400 points gone in the mid-cap index, and lots of stocks are now moving to 10% cuts. NBCC is down about 8%, IRB Infra is down 7%, Hindalco, SJVN. Manish, I wanted your thoughts here. Suddenly from being, the most loved sector, the PSU space has suddenly become, untouchables in the last couple of days. What do you do here if you own some of these PSU names?
Again, Sonia, I don't think it's fair to just buy a stock because it's PSU or not. There are pockets which look interesting to us, which is around the power space, and there are pockets like defense which look expensive to us. So I think everyone needs to do their bottom-up research. As I said, in general, we think the power space is interesting and the PSUs within that look interesting. You can take some bets on the divestment theme, I think, because clearly if the election outcome is favorable for the market, there is some basis to say that a lot of the divestment, the strategic divestment which didn't happen in the last term, can come back. So those are the bets you'll have to take. But I, for example, find defense to be very expensive. So I think it all depends which pocket of PSUs you want to be.
Manish, we'll leave it there for today. Thank you very much. It's a great conversation as always, and appreciate your time here on CNBC-TV18. We have the management of PI Industries waiting by, but I'll just take 30 seconds because it's important and markets being the focal point. The Nifty is down 60 points. And if you can just quickly show me a few of these large movers, because it's flipped. Market breadth was 1:1 about 5 or 7 minutes after market open. It's now 4:1 in favor of declines. So it's completely flipped. More, actually. So almost about 6:1 now. Very sharp kind of deterioration is what we've seen. And look at these. SJVN suddenly becoming the top volume-led loser, 7% lower. NBCC is down about 8.5%. Hindalco is down 8%. There is Indiabulls Real Estate, which is down 6%. Parag Milk is down 8%. It started down 4%. IRB is down 8%. There is HBL Power, which sold off 10% yesterday. It's down another 8%. It's been one of the big, it's basically tripled in the last 2.5 years. HEG is down 7%. Phoenix Limited is down 4%. Glaxo, etc. We mentioned. Bajaj Hindustan is down 6%. There's KPI Green, which is down 5%. JBM Auto is down 8%. Gensol, which has been such a big winner, is back to just under 1100, is down about 5%. So a dramatic turn of events, but just still the first couple of, it's been 15-20 minutes or so as far as market open is concerned. Not even that. 70 lower now on the Nifty. But as I said, we have managements waiting by. PI Industries is the first. Sonia.
Absolutely. And, it's going to be interesting to hear out the management because they reported a strong set of numbers in Q3. The gross margins have improved. Agri-chemical exports have surged in double digits, although domestic revenues have been subdued. Mayank Singhal, who is the Vice Chairman and Managing Director at PI Industries, joins us now to talk about that. Mayank, thanks a lot for joining in. I want to first talk about the export market, which has been picking up quite a bit. Can you explain the reason behind that and what kind of growth are you expecting to see in exports in FY25?
Yes, good morning. Thanks for having me today. We have seen the growth in the export market, as you know, from the innovative business model of PI, where we focus on the new generation innovative products. As you will see, this sector continues to grow for innovative products. While you will see certain downturns you've seen in the ag sector, which is purely driven by the generic business, which has been on the downturn. But PI being in a niche and the innovative spaces continue to grow, and we continue to see the projected growth that we have stated earlier.
No, I want some numbers if you can share with us, please. What kind of growth are you targeting for exports particularly? And have any of your markets been hit because of the Red Sea crisis and the uptick that we're seeing in freight rates?
Well, as we've indicated, about 18 to 20% growth, and we continue to be on that path there. Yes, the Red Sea has its impacts. Obviously, it is having logistics challenges in terms of times and delays, but I think those have been all aligned, and we are working well with the customers to meet our objectives.
Okay. Hi. Good morning, Mr. Singhal. Nigel on this side. You're working with your customers, so do you mean that they are the cost increases they are absorbing?
Yes, there are going to be marginal freight cost increases, which we will be working with our customers to take them up. Yeah. As you would see, freight is not a big component of our total cost structure.
Got it. So no big worries on that front. That 18 to 20% that you're talking about, will you likely hit the upper end or is it going to be the lower end?
Well, I would still stick to my 18 to 20% as indicated.
Okay. All right. I wanted to focus on diversification. You've made some steps, with regard to that acquisition, and the pharma segment could see some kind of growth in the time to come. My question to you is, in FY25, what kind of a number can we get in terms of revenues from the pharma business? I think for this year, you'll end somewhere in the vicinity of around 500 crores. So for next year, what can it do? And what kind of profitability can you guide for as well, just in this segment?
Well, I would say for now, we'll just, within this year, we just probably see organizations we are integrating. We are building our strategy. I think we'll be in a better position to answer this at the end of next quarter. But we definitely see that sector to be interesting. And as PI way, we're going to build a unique strategy, which is going to take a little longer time to deliver the unique value that we're always able to create so far.
Okay, all right. I've just got a note. I'll just complete that point. For FY25, a couple of brokerages are estimating that you do somewhere in the vicinity of 625 to 650 crores from the pharma segment. Possible?
Well, I'll keep that for a guideline for now, yes.
All right. Mr. Singhal, hi. Good morning. Could you tell us what was the growth in sales from new products and how much did it contribute to revenues this quarter?
If you see the new product growth has been about 50% as mentioned during the investor call. So that's been the contribution of growth from new products in this quarter.
Okay. And you think, that's the rate that we should expect, or it'll moderate as we go forward?
Well, this is not a quarter-to-quarter focus as you would appreciate, because these are cyclical in nature of the business. So obviously over the years, we have a good freshness index, and we continue to expand that front from our end, yeah?
Sure. Mr. Singhal, can you give us some more details on what's happening in the pharma business? Just trying to understand in terms of a timeline, when do you think you can become profit positive in the pharma business?
Well, as we said, we're right now in the process of building and integrating these organizations. So we are investing in both resources and capital to develop capabilities. And I would be in a better position to answer this at the end of next quarter.
Okay. Can you also tell us, you said 18 to 20% is what you're holding on to for the full year of FY24. Do you think, given the situation currently, both in exports and the domestic market, is that something that you can do a 20% growth even in FY25, or is it too soon to make that observation?
I think it's too soon to make assumptions right now. As I said, we are maturing our plans, but we are seeing not a bad trajectory as per our strategy for the coming year.
Okay. All right. Mr. Singhal, has there been any price erosion in pyrosulfine due to competition coming in? Has there been any kind of hit to revenues, and do you expect some further price erosion out here?
Well, we are on the more, I'd say, the contract manufacturing side. So, and the product is sold by the innovator, and I would not be in a position to comment on that. But obviously, as generalization happens, price erosion happens, but manufacturing has a different impact, yeah.
Okay. All right.
Can you at least tell us if there are any more price cuts that you think that would be coming in pyroxalpine?
Well, that would not be the right moment for me to comment, as is the molecule of the innovator, and it's not a position that I would be taking a stand on. Yeah.
Would there be any risk from this going off patent? Because this is going off patent to some degree by in the next 2 years, right?
Yes, so as you would appreciate, we're in the manufacturing part of the value chain, and manufacturing has its costs and its deliveries, and obviously price erosion does happen, and that's more impacted to the marketing front side, which is held by the innovator.
Okay. No, but if on the innovator side, more players come in, as we've seen with other compounds in the past, prices can fall very sharply, right?
Well, not necessarily depends on compound to compound. On the other hand, if they do come down, then it also expands the markets. And we've also seen that when that happens, the markets have expanded 2x or 3x for these products. So that's where we are working and with our partners to build that strategy.
Okay, Mr. Singhal, final question before we let you go. You're sitting on a fair bit of cash. You have mentioned that you'll want to focus more on the non-agrochemicals molecule part of the business as well. You have done a small acquisition in the recent past. Are there more acquisitions in store? Is there more inorganic growth on your mind?
Yes, the company is looking at inorganic opportunities, which are synergistic and can offer unique technological capabilities for the organization to develop itself going forward for a sustainable growth.
So sometime in the first half of the next fiscal, should we hear something about this?
Well, unfortunately, you can't predict acquisitions like that. They take their own
What could
time
the size be? Give us a sneak peek, Mr. Singhal. What are you scouting for? What could the rough size be?
That's not to be let out right now for sure.
Okay. We'll just take it that you're on the prowl and you're looking at it, right?
Sure.
Okay, all right. We'll leave it at that. Thanks a lot for joining in and appreciate your time here on CNBC TV18. But let's do one thing. Let's move on to another set of numbers now. Samvardhana Motherson reported a good set of earnings for Q3. Revenue saw healthy growth. You had the margins that are strong. Net debt is also declining. Pankaj Mittal, the Chief Operating Officer at Samvardhana Motherson International, and Kunal Malani, the Chief Financial Officer at the company, join us now to talk about that. Gentlemen, morning to both of you. Mr. Mittal, I want to start with you. It was a very strong revenue growth of 27% that you saw in Q3, and 9 months of the year, a 27% growth as well. What do you think you can end the year with, and what is the growth forecast for FY25? You think you can do this 25 to 30% growth?
Well, Sonia, good morning, and thanks for bringing us to the studio today. As you know, we have a clear vision for 2025, and we continue to move towards that. So we all are working together with our customers. There are lots of opportunities which are there in the market, and we work together with them. So this growth has been both organic as well as inorganic, as we have already absorbed some of the mergers, the acquisitions which we had done. Few more acquisitions are in the pipeline, which needs to be merged into the company for $1 billion plus like Yachio and others, which we had announced earlier. So we do see a good growth coming forward while we absorb these acquisitions as well as organic growth in the emerging markets.
So you were telling us about the pending acquisitions, right? There's Yachio, there's Sirma Enterprises, there's the Lumen Group, ADI Group, etc. Can you tell us when all of this comes together, when it gets merged into the entity, what will the growth be that we're looking at for the consolidated entity in FY25?
It should be somewhere between $1.1 billion to $1.2 billion additional revenue coming from these.
Okay, $1.1 to $1.2 billion of additional revenues with a lot of these acquisitions, that is Yachio, Sirma, Lumen, etc. I think this contribution will come in from FY25 onwards, right? So we are looking at it in FY26?
This will come in like, in the next 2 quarters, they should get absorbed. So we do expect that that should happen. So as you know, the closing sometimes takes a little time, but we do see this coming in the next financial year.
In the next financial year itself. Okay, got it. Kunal, come in on the situation right now as far as the globe is concerned. 45% of your revenues currently comes from US, Germany and China. How is the global situation at the moment and what kind of growth do you see there?
Well, actually, there was a little bit of changed mix that we saw. If you would have seen our presentation, we spoke about the fact that somehow the mix on EVs actually went down. The mix on the premiumization also went down a little bit. But then when we dug deeper, we realized that a lot has got to do with the fact that some of the launches are yet to occur. And hence, as the launches come in, we should be able to see again the premiumization portion of the growth kicking. That's the one that actually matters from Motherson's perspective. At an aggregate level, I think we were pleasantly surprised by the resilience of the European market. The American market was impacted by the UAW strikes that occurred. Hence, our OEMs were impacted there. But right now, we see some degree of stabilization in that market as well. And Asia, especially India, continues to do well.
In your presentation, you said in your conference call actually that in Europe there may be some demand softening, especially for the businesses like PKC, right? And you do have a large presence in some of these European markets. When you talk about demand softening, what are you saying? Because yesterday we had a word with the management of Bharat Forge, and they said that forget moderation and growth, some of the export markets are even seeing degrowth. Could even see degrowth in FY25. Is that something that you would concur with as well? And if yes, what would the impact be on your own business? How much could the degrowth be in Europe?
Well, actually, the degrowth that you're seeing is driven off the commercial vehicle side. I would say there's some degree of softening that we are seeing in Europe there. But on the past car, you would have seen in our presentation, it grew actually 17%, which pleasantly surprised everyone. The production levels continue to do reasonably well. Obviously, there is the overhang of all the interest rate cuts, etc., or interest rate rise, etc., that has been there. So there is a belief that there's some degree of softening that would occur, but we are still yet to see it, at least on the four-wheelers.
All right. So you're saying there's softening in the commercial vehicle side in Europe, but passenger vehicles continues to be strong. Mr. Mittal, since we're talking about Europe, right, the currency in Argentina is significantly devalued in the past few quarters on account of hyperinflation there. And there have been stringent exchange controls by regulators as well. I want to understand what could the impact of this be on your business over there?
Well, this is already factored in the results, as you would have seen in our release, that this hyperinflation has led to a situation which has impacted the business in the sense that we can't take out the money from Argentina and we have to continue supplies. So this has been taken on both sides. So the peso has changed to a dollar from 200 pesos in March to about 800 pesos so far. So this is under discussions with our customers, and while we take them into our accounts as of now, we do believe that we will be able to work it out together with our customers to find a good solution.
You have mentioned it in the press release, but you haven't mentioned an amount of what the impact would be. Can you give me that amount in the subsequent quarters, any hit that you're expecting to face on your margins, etc., because of this currency devaluation?
We can't predict as to what will be the amount in the subsequent quarters, but we do have given the amount which is there in this particular quarter. So I would, Kunal, would you like to add to this, please?
Impact has come because of the sharp depreciation of the Argentinian peso, which moved from about 200 a year back to 800 to a dollar now. And that is what has caused the revaluation of many of our assets as well as liabilities, more importantly, because we're not allowed to pay back these liabilities as per the strict control regulations there. And hence, much depends on how the currency really behaves. At the same time, these are all customer-nominated suppliers, and hence we work with the customers to find an amicable solution. We hope that sooner than later, we are able to solve this along with the customer, like many other aspects in our business as well.
But I think this is, spooking the market a bit because the stock has also been under pressure and Europe is a large chunk of your business. And now we are seeing such a sharp devaluation in the currency in many of those pockets like Argentina. Do you think it will be hard for you to get to double-digit margins? Because, even in the quarter gone by, your margins have improved, but it's still at about 9.5%. Do you think double-digit margins could be far out? And if yes, what are we looking at in terms of a timeline?
Sonia, I think we've discussed many number of times. We really don't focus on margins. We focus on ROCE. On the ROCE side, if you see, we have improved from 16 to 17 if we were to consider our vision plan, and to 15% if we were to consider our reported situation. So directionally, we seem to be improving. We have continuously maintained that we will be, on a year-on-year basis, be showing continuous improvement. The integration of many of our M&A should be able to support not only growth in those respective pieces, but synergies across other lines of the business, which should then add up to what you're saying as margins. So, and growth for us. So directionally, I think we should again be on an improvement path is the way we see it. We are referring to some degree of softness, but frankly, with the slew of M&As plus the slew of newer opportunities that we are seeing in the market, I think right now we are pretty much inundated with opportunities. So
Okay.
growth is not a challenge, and margin flow through.
Okay, all right. Just two quick questions from my end. Since you're talking about the slew of M&As, right? This Lumen acquisition that you've done, and a large part of their business is in the wiring harness space, which is growing quite a bit. Mr. Mittal, I want to understand from the Lumen acquisition, what could the contribution be to your own business? And the other part of my question is on the debt. Debt has gone down. Is there scope to decrease it further?
Well, Lumen acquisition will add, about 100 million plus of Aussie dollars of business. And it's a very interesting business because this brings us to support the Aussie market where the OEMs had stopped manufacturing, but it remains a big consumer and there are a lot of fitments which are being done. So this company works together with the OEMs to make those vehicles for the Aussie vehicles, to tweak them. And this is very interesting. And then they're moving into other markets as well. Coming to the debt reduction, yes, we have a clear direction that we would like to continue to work while we have invested more and more into the acquisitions. Also, you have seen that our leverage ratios have come down, and we work towards that to reduce the leverage ratio, to improve upon our working capital, as you would have seen from our presentation, that how we are improving on our working capital as well. So inventory reductions, optimization at all places. And the board really commended all the teams across the world for working in this direction and for the outstanding results in this quarter.
All right, we will leave it at that. Thank you so much, Mr. Mittal, as well as Kunal, for joining us and explaining the business as well as the way forward. That's Samvardhana Motherson. The stock is down about 3% because some of its businesses in Europe are facing a lot of pressure. There is a massive currency devaluation that you're seeing in Argentina. For example, in March of 2023, the Argentinian peso was 209 to the dollar. By December, it went to 800 to the dollar. And that devaluation has really hit some of these, companies that have businesses there. So I guess that's the reason the stock is also under pressure.
Valid point. Sonia explains why the street is a little bit nervous on that front as well. By the way, quick check on the markets. We're more or less flattish, but the railway stocks, they are really running along. You have IRFC that's moved up close to around 7%. It was trading in the red in the initial moments of trade. RVNL has moved to the high point of the day. So big spike up out there. And IRCON as well. So all of them, the train is moving quite well on that front. These stocks are seeing a big recovery. For the time being, slip into a short break. On the other side, we'll get chatting with Mr. Sharma of NCC. They reported their Q3 numbers. Stay with us. Welcome back. Well, let's focus on NCC. They've reviewed their revenue guidance upwards to around 32 to 33% for this year, for a year-on-year basis. Mr. Sharma, the head strategy at NCC, joins us on the show. Hi, Mr. Sharma. Good morning, and thanks so much for speaking to us here on CNBC-TV18. Well, a couple of quick questions before the code of conduct sets in. The order inflows will be something that the street will be focusing on. I think earlier you were guiding for around 26,000 crores. You're at around the 21,000 crores odd. Do you expect to stick to this guidance?
Sure. At the very outset, very good morning, Nigel. You are right that, the order inflow guidance that we had shared with the street, it was, 26,000 crore. And as we speak, we have already booked about 82% of that number. That is 21,238 crore to be, precise. And as we speak, we continue to, stick to the guidance that we have shared with the street. We are quite hopeful of hitting that number by end of this fiscal.
Okay, all right. So we've got that out of the way. Now, for FY24, you've gone ahead and upped your guidance, which is good news. Street will be very, very happy about that. But what it does sometimes is it adds a lot to the base, which makes the next year a little bit more challenging. So to call it mathematically. But with the kind of order book that you have, maybe in fact anything is possible. So could you tell us for FY25, what kind of a revenue number are you targeting? You could give us a broad range, revenue growth as well as revenue.
I fully agree with you. Well, let me bear with me for a couple of minutes. The way we work in the infrastructure business is, whenever we talk about a future number, number in terms of revenue and margins, what we essentially do is we try to look at each of these projects individually, and we have about 150 odd projects. So we try to look at each of the projects and then try to assess in a realistic manner what is the execution that we can do for each of these projects, and then we work out that number and share with the street. We have not started that exercise, That is something that we would be completing. Then we would, seek the approval of the board. And I would be very happy to come to your show and, share that number in May, because we have to take the approval of the board before we, announce that number. So that is something that we typically do in May.
Right.
I hope that answers your question.
We're looking forward to having you on our show.
Mr. Sharma, hi, good morning. Just to pull
Good
back
morning,
just to pull back a little bit and look at the slightly bigger picture. If you look at FY25, the budget that we've just seen from the government, right? Two areas. Roads has seen allocation in FY25 by the central government, which is only 3% higher as compared to FY24. Last 3 years, roads were seeing between 50 and 25% growth in allocation. This year, it's 3%. The other segment is housing and infrastructure, which is also seen around a 3% higher allocation. So the absolute amounts are higher, but the rate of allocation has actually come off quite sharply. So and those are two segments which I think are important. Now, I understand this is central government budgets and state governments that will be still spending, and you have to look at that. But do you forecast any slowdown at all in FY25 if numbers are what they are?
Not really. As if to take leaf from your playbook, we have already booked good amount of orders in this financial year as well. For example, we are sitting at an order book of about 57,440 odd crores. So even if I were to accept the proposition that you are talking about, that there might be possibly some slowdown. So still we have sufficient amount of orders are already available with us, and all that we need to do is to go out and execute. And this is what we have successfully done in the last 3 quarters of this fiscal. So even if there is a slowdown, but I think the larger picture possibly is not the decrease in allocation. You are aware about the elections are around the corner, and that might slow down the pace of the award for a couple of quarters.
Got it.
So, but we have nothing really to worry about. And typically in any financial year, the 80% of the execution comes from mostly the existing projects. The newer projects. Let us say that if we bag a project in this order, the contribution in the next financial year will not be, very high from these so-called new projects. Most of the execution is done from the projects that we have already bagged. The drawings have already been approved. We have already mobilized,
Mr. Sharma?
So that is not something that really worries us.
Got it. That's about the order book. I wanted to understand a little more of what's happening with the balance sheet as well. By when do you expect to get the receivables from Sembcorp? How much have you received so far? What are we looking at in terms of the timeline?
Sure. So as we had, shared with you, in the last conversation that we had, in the award, we were to receive about 197 crore from them. And I'm happy to report that in this quarter, we have already received about 147 crore from them. So 50 crore is the remaining part of the money that we have to get from them. But we understand that, they have decided to challenge this part of the award. And that is something that we will have to wait and see how things really pan out.
Okay. And what would all of this mean for your debt levels? So what is a net debt at currently? Do you have any scope to bring it down further in the next 1 to 2 years?
Sure. We have already shared a guidance in the call that we had a couple of days back, in which we have already shared a ballpark number of about 1,300 to 1,500 crore by end of this financial year.
All right, Mr. Sharma, could you tell us what are the potential orders and revenues you're expecting from the Jal Jeevan mission?
We already have a very healthy, order book from this Jal Jeevan mission project. As we speak, the total order book would be close to, a little less than 18,000 crore. And we continue to see healthy pipeline of projects in this space. And on case-to-case basis, we are bidding for all these projects, and we are quite hopeful of bagging at least a couple of them in the next financial year.
Okay, all right. We'll leave it at that, Mr. Sharma. Thanks a lot for joining in and speaking to us. That's NCC with their view. But let's talk about the technicals of the market now. It's really all over the place. The mid-cap index at one point was down about 1%. Now the mid-cap index has recovered. The entire market has recovered. In fact, the Bank Nifty is the one that's really batting for the bulls this morning, up almost about 400 odd points. And the Sensex is up 275 odd points. Prakash Gaba is joining in now to give us his view. Prakash, it's really all over the place, and this volatility doesn't help anyone, right? I mean, you generally tend to sometimes burn your fingers both ways. What do you do for the rest of the day, and what are the individual stocks that you're looking at now?
Yeah, volatility for a trader, I think is very good, excellent, super. The more the volatility, the more the trade. If it's going up, buy and sell. If it's going down, sell and buy. And good morning to you, Sonia. Well, structurally, Bank Nifty looks good to me, better now. It's trading at somewhere closer to futures 45,474. We can see an up move from here. Only thing is we need to have a stop. I would have a stop on Bank Nifty at somewhere closer to 45,200 and trade long. Now, if it goes up, possibly we'll see maybe a move around 100, 150 points. So there is a move on Bank Nifty. I would avoid Nifty per se. Stocks that I like too. I think I like Axis Bank. Yes, looks good to me. Trading at 1,060 zones. It's given a breakout. Possibly we'll see a target with 1,070. I would have a stop below 1,055 on Axis Bank and trade long. Second stock that I like is again for the banking, and that is ICICI Bank. It's given a beautiful breakout. The move is good. Trading at 1,014. Would I have a stop at 1,010? Yes, 4 rupees stop loss. That's good enough. The upside, the target is around 1,025 to 1,030. There could be a good move available. The ratio also is in our favor.
All right. Those are individual trades and recommendations coming through. Prakash, thank you very much for that. We'll come back to you for more in a bit from now. That's an important news flash at the bottom of the screen. Trading at MCX should resume at 11 a.m. We'd put out earlier that they were hoping to start trading by 10 a.m. That was, something which they were tentatively hoping to do, but not anymore. And trading will only resume at 11 a.m. And the team is working to resolve some of the technical issues. Remember, I think over the last several weeks, we've sort of had issues. We've had sort of, reports of some issues at MCX in terms of the trading infrastructure, etc., settlement, and so on and so forth. So this is not new, but this is now new information coming through that trading will resume at 11 o'clock. Well, we'll take a quick commercial break here. We'll focus on some of the other stocks on the move in just a bit from now. Stay with us.
Well, the big accident this morning is coming on Hindalco. That stock is now down 10%. Nigel, what's the reason for that?
Well, Novelis came out with a set of numbers, and the numbers were bang in line. On the EBITDA per ton came in at around $500 per ton. They've also guided that in the next quarter, the EBITDA per ton moves to $525 per ton. And, in the subsequent months or quarters, it's going to move to around $600 per ton. They have all those plans in place. So no worries on that front. The problem is the debt moved up marginally. That as well is okay because they have a big capex underway. The biggest problem about these numbers were they shocked the street. They went ahead and they increased their capex on the 600,000 ton plant that they're setting up in the United States. Earlier, it was at around $2.5 billion odd. Now they've upped that to around $4.1 billion. And the street doesn't like this sort of a capex spike. In addition to that, they've also said that the project was expected to be completed in the early part of the first half of FY26. That's the financial year. Well, now, in fact, they're talking about in the second half of calendar year 26. So that's the problem with, with regard to higher capex as well as delay in the project. Brokerages, Equerris, they have an ad rating on the stock, target price of around 570 rupees, but they're saying the IRR on this project from around 17% earlier, now they're working with around 10 to around 12%. Jefferies, they continue to maintain their buy rating with the target price of 725. They'll review it post the India numbers that will be expected in the next few hours. While InCred, they have a contra view. They like the capex. They're saying if the stock falls because of this capex announcement, then buy it. So that's the contra view that's coming in there. For the time being, the street has no patience when capex goes up for Hindalco in particular. Explains why the stock is down 14%.
Right, Nigel, thanks very much for that. The market on the index is picking up a little bit more. 70 points at the day's high is what we have. Phoenix Mills is the next one we're focused on. Sonal is here with details. Sonal. Sonal, take it away. Phoenix Mills.
Well, yes, Phoenix Mills reported numbers, and while the P&L doesn't look so bad, the numbers look good. Revenue growth of 44%. We saw an EBITDA growth of 44%. Margins were absolutely flat at 56%, but the profit growth came in at 70%. What the street doesn't seem to like is the fact that consumption in one of their biggest malls has fallen. In fact, it's down 2%. We'll get into those details. But if we look at the balance sheet as well, their free cash flows have come in at a 5-quarter high, so that number looks good. As I said about the consumption, their overall consumption is up 25% on a YOY basis, but that is because of the new malls that have come by. On a standalone or on a like-to-like basis, the consumption is up in low single digits at 5%, and one of their biggest malls, which is Phoenix Palladium, has seen a decline in consumption to the tune of 2%. So revenues have gone down in terms of mall consumption, and that would say that demand is coming down as well, and that's what the street is concerned about.
All right, thanks a lot for that. Demand is coming down. That's something that we've been hearing for a while. Let's slip into a quick break. On the other side, Lata will get chatting with Amitabh Chaudhary of Axis Bank from the Axis India conference to talk about the quarter gone by and the banking sector going forward. Stay tuned.
Welcome to It's the Economy. Axis Capital India Conference is underway, and joining me from the sidelines of the conference is the big man from Axis Bank, Amitabh Chaudhary, Managing Director and Chief Executive Officer. Amitabh, thank you very much indeed for joining us, finding time for us on a busy morning. But what's the theme that is driving this conference? What are you looking for and whom have you invited?
So, Lata, firstly, thank you so much for inviting me to your show. Well, Axis Capital has been around for a long period of time. We have been doing this conference annually. This is that annual conference. But I think what is different about this conference is that the number of companies which are coming to the conference is the highest ever we have seen, 165 companies odd, 600 investors. But more importantly, as we have revamped our research side of the business under Neelkant, we have started publishing some real, futuristic stuff in terms of what we expect to see in India in terms of, on the PV, on the electronic side, on the defense side, on the fintech side. So, and as we have published these reports, I think we are going to have a number of sessions around each of these themes, and obviously have industry experts come and talk about it to give the participants an opportunity to not only understand and appreciate as to what our house view is, but also get to hear from the experts in terms of what are some of the themes which could evolve and become investable in India going forward, or become big opportunities in India going forward. So that's a big change, and obviously we will continue to build on it as we move forward. Looking forward to a very successful conference.
Oh, yes. And we have also benefited from Axis Capital and Axis AMC's reports, in particular, Neelkant pointing out the amount of, securities that the US government is going to issue and the impact it is having on the global cost of money, or even Ashish Gupta's gamification of equities and the amount of F&O, positions, all those most useful. Everything that's coming from your stable. But I want more from you on the present situation. The Reserve Bank's monetary policy was neither dovish nor hawkish, and the flow in the call market is still ruling at 6.75, 6.8. So is this war for deposits not getting over anytime soon? How do you see it moving?
So, Lata, we have a unique situation where, apart from the geopolitical factors you just mentioned, we have a fiscal consolidation going on. Monetary tightening is still very much there. Our exports of goods and services is slowing down. RBI has asked and questioned the banks on CD ratio and what is their strategy to manage it. As you rightly said, the call rates have gone up. The bulk deposits rates have gone up by 1%. The credit growth, for some reason, is not coming down. I think banks are continuing to lend and pushing for growth, which does mean that there is, if the monetary tightening is there, deposit growth has been constrained, and so there is a bit of a war for deposits going on. It cannot continue. It cannot sustain. I think a couple of things why. One, RBI itself is hinting to the market and to the banks that they need to slow down a little bit. They're also, and that's why where the CD ratio comes in and some of the messaging from RBI, they've also increased risk weights in certain asset classes where they're seeing growth, which from their perspective is a bit too high for their comfort. And also just the nature of things that, you cannot sustain a credit growth without deposits backing it up, the right kind of deposits. Otherwise, you'll, be destroying or changing the nature of your balance sheet over a period of time, which will not be the right thing in the long run. So my view is that the deposit and the credit growth has to converge. I also believe that RBI, given its clearly stated stance that they need to get inflation down, while the core inflation is down, the headline inflation remains high, remains volatile, and they will continue to work towards it, which means that liquidity will remain tight, which means that the interest rates will remain higher for longer. And if all that is going to continue, I do believe that at some stage the credit growth has to come off, or the interest rates have to increase much more than where they are today, and obviously the full transmission has not happened. And as interest rates increase, hopefully, again, the credit growth will have to come down.
Okay. Well, Bank Nifty is quite clearly the underperformer compared to Nifty. And perhaps the market is telling us that they have already seen peak margins and peak ROAs and peak ROEs. Would you say that margins have peaked? And more importantly, can they fall further? Because you did see a good 25-30 basis point fall in margins already.
So, Lata, you're right. If you look at just the private sector banks, the top 25 private sector banks, the margins are off 40 basis points on an average from Q4 23. And yes, as we just talked about the fact that the repricing of deposits is still happening, while the repricing of loans is taking its time, and because of the credit growth and competitive intensity, maybe the repricing of loans is not happening to the extent it should. Hopefully, it will play out a little bit in the next couple of quarters. But if we were to assume deposit growth is going to remain constrained and competitive intensity on the credit growth is not going to reduce or not going to reduce enough, it does mean that the NIMs could continue to remain under pressure. Now, every bank's, its balance sheet, its mix is different. They have their own set of factors which will determine how their NIMs move. But yes, in the short term, NIMs could be under pressure because of what is going on in the market. Now, we also know that at some stage, all of us are predicting, the timing could be an issue, that the interest rates will be cut. And when the interest rates are cut, we also know that, again, the loans will reprice downwards faster than the deposits. And at that time, again, you could see a cycle for some time where NIMs could come under compression. Now, over a period of time, hopefully, they'll find the balance and NIMs should stabilize at the same level. But there will be a period during which you might see some compression on NIMs because the loans are just repricing faster than deposits. So all of us are aware of these facts. All of us are looking at levers to ensure that the volatility on NIMs is not there or the NIM compression is not there. And as I said, so a lot will also depend on individual banks in terms of what they do, how do they react, what is more important to them, is credit growth more important to them, is NIMs more important to them, is ROEs more important to them, overall profits is more important to them, and they have to balance all these factors to ensure that whatever they've been saying they want to do, they're delivering on consistently.
Okay. Can your credit costs fall even further, Amitabh? I mean, as a percentage, I mean.
No, Lata. Well, if you look at the NNPAs, they've fallen from, March 23 further in December, from 3.9 to 3%. I don't think the credit costs can fall further. I think you're pretty much at the bottom of the, zone here. I think the credit costs have to move up. Firstly, the recoveries, the lumpy recoveries which the banks have seen are only going to reduce over a period of time. And secondly, we need to start moving towards the mean back up. Now, obviously, we're going through a period where generally the portfolio quality is behaving very, very well. We are seeing some signs, generally in the system on personal loans and something on the credit card side. But I would say nothing on the horizon which tells me that the credit cards are going to increase immediately. But, in the next 6 to 8 quarters, they have to move up. I don't think they're going to come down further. Where is the scope for them to come down further?
Yeah, no, at 0.3% annualized, it's really tough to see how things can. But I just wanted it clarified. Okay, well, let me come to a question, separate
so I think all these costs are coming from the retail side. Sorry.
No, go ahead, please.
No, I was just saying that, most of these credit costs you're seeing on the retail side, the wholesale side credit costs are ones which are at historical lows. So at some stage, you will, all the fresh lending all of us have done, will start seeing some, and a lot of lending has happened to the SME and that sector. We will see some credit costs coming up there also and kind of rising a little bit. That's just
one niggling worry in your Q3 results. Why were the operating profits so much lower than we thought? It's even lower QOQ.
Well, there are a couple of reasons driving it. You very well know that our NIMs came off a little bit, and obviously that has a huge impact on your overall operating income. We also, while continue to see, very healthy growth on the fees side, sometimes the trading profits tend to move up and down, and that causes things to move, at least as far as operating profit is concerned, a bit sideways. And then, yes, given where we are in terms of return on equity, we are continuing to invest for the future. And that means that our expenses have remained elevated. We have told the market consistently that if we are able to deliver the promised ROE, which is kind of the benchmark or the North Star for us, we will use that opportunity to invest for the future. So, yes, the expenses were also elevated. We believe we can control them when we need to, but we will continue to invest as we move forward. And also, please don't forget that we are still going through the transition on the Myrtle side. We continue to incur expenses, technology expenses on the Citibank acquisition, which once that transition is over will come down. So kind of there are a couple of reasons which are driving it, and that's how we explained it to the market.
Okay, fair enough. Now let me come to just the quote we got from you when you were launching your Hurun card, you said that you are very willing to take over, have a relationship with Paytm customers, provided the regulator has no problem. You have to go and take specific permission? I mean, after all, you're only taking customers from them. A specific permission is needed?
No, so Lata, the question is not of that. The question is as to how that transition will happen. If, firstly, we are very clear in our minds that, for example, I'll just give an example, not that, anything is done or signed with the Paytm, but I'm just giving an example that, let's say the merchants of Paytm were onboarded by us. We have to, and we will insist on doing individual KYC. Now, that cannot be done, for example, by February 28th. So it does need time. So when I say we need permission from RBI, we need permission from RBI in terms of saying that, yes, this is the roadmap you can take. We are okay with that roadmap. We are okay with the time you might need here. And we will be watching you very, very closely. But we do need RBI to bless it, because we cannot, just suddenly take over all the merchants and say, by the way, I'll take 12 months to do KYC. I mean, we cannot take that problem on our, on ourselves unless RBI gives us some kind of dispensation. So I'm just giving an example. Same thing can happen on the FASTag. Same thing can happen on the nodal account. So my view was that RBI obviously is looking at the matter very closely. I'm sure Paytm is in discussion with RBI. And depending on what view RBI takes on what has to happen up to February 28th and beyond, we are happy to work with Paytm. They're a large fintech player. They have a large number of customers. There will be some market disruption. We are very happy to support generally broadly the customers and customers of Paytm in this story. We have had a relationship with Paytm for some time. And that's what I was referring to when I made that statement.
Okay. Yeah, fair point. No, now I understood. Typically, I would really want to know how many customers you can do KYC in a day. That'll help. But besides the details, since I'm running out of time, can you tell us the update on Max? I mean, now the share purchase is over, and what's the future relationship looking like?
So you are aware that, recently our Deputy MD Rajiv Anand was appointed as the chairman of Max. We will have the right to appoint majority board members once our equity stake goes up to 19%. What RD has approved is this investment. We are still awaiting CCI approval. So my expectation is that the real investment will happen into Max in the first quarter of the next financial year. We obviously have the internal approvals in place, both from Axis Bank and Max's side. We have RBI and now the regulatory approval in place. We do need to get the last bit of CCI approval, which is in process as we speak. Obviously, Max is a very important and strategic investment for us. We are committed to support the growth story of Max. We believe it's an incredible company with a very, very solid management team. And our role there would be to support them to become bigger, better, and continue to make an impact in the marketplace as they've done in the past. I mean, they were the only independent, not bank-backed insurance company which has done so well over a period of time. And we are obviously looking forward to this higher level of engagement with them as we move forward.
Okay. All the very best to you, both for Axis Bank and for the conference that's underway. Thank you very much for sparing time for us in what must be a very busy hour for you.
Thank you so much, Lata. Thank you. Thanks a lot.
Well, that's the word from Axis Bank. And incidentally, banks have bounced back very well. The index itself went up 1.1% from actually being about 0.9% lower. So there's a sharp jump that's come in the banking sector itself. In fact, all the indices are in the green, and the mid cap is almost getting there on that auspicious note. We wind up on Bazaar. Chart Past is coming up.